Fortune Collective podcast on this beautiful Saturday morning. With me is Bartholomew Perez, Juan Magaña here, both realtors. We have a very special guest today by the name of
Juanita Gonzalez.
So I hope you guys already had your morning coffee already and are wide awake. Bartholomew's just 3.
I know. Gotta save some for later today for the dancing.
Oh, it's Dancing Saturday today?
Dancing and back day. So gotta be ready for my deadlifts, and the only way to do that is some pre-workout.
You don't want to throw your back out, dude.
Dude, that's funny.
You
You're the
throw your back out.
second person to tell me that today. Veronica had a dream that I hurt my back while something was going on, and then I was injured. All right, cool. And you're the second one to tell me that. Third one was like, all right, foreshadowing.
Could be a sign. Hopefully not.
Yeah, be careful. Because you're over there by yourself, and yeah, no, you cannot hurt your back on your own.
I'm never alone. I'm always with the man above, you know.
That is true. That is true. I just meant physically.
Facts. That is, yeah.
Well, anyways, looks like you guys are all livened up and ready to go. So, there's a lot of talk out right now in the industry. I think that we're all well aware of what's going on with this whole, one, interest rates is a huge thing. 2, now that we have this whole NAR settlement going on, and, the possibility and the chances of now the buyer paying for their own representation, that's kind of what we wanted to talk about here today. So just kind of wanted to bring it up and say, what are your guys' thoughts in this case with the NAR settlement? As we know, a lot of the NAR settlement has to do with the whole fact of, and this is more for the audience or who are trying to catch everyone up to speed. The NAR settlement had to do a little bit more with the public coming to the Department of Real Estate saying, hey, us as sellers, we're tired of paying representation for the buyers. It shouldn't be like that. So what they proposed was that now the buyers go ahead and pay for their own representation, meaning that on top of down payment, on top of your closing costs, now as a buyer, they're going to have to tag on also their own realtor fee. So that's kind of what this whole thing is about. And there's a lot of back and forth, whether it's a good idea, bad idea. And I wanted to go ahead and talk a little bit about just, how, my own perspective on it is, I think it's a valid reason because I feel like if you are utilizing a professional service and they are, owe you fiduciary duties, that, at the end of the day, you should be, in essence, responsible for that fee. However, I do feel for the buyers as it's another large chunk taking out of, or that goes into purchasing real estate. But there's some pros and some cons with it. I want to take it back to the 1960s, where back then, 1960s, 1970s, there was no buyer representation at all whatsoever. It was literally just, you go to a house, you had an agent there, which was a listing agent that worked for the listing broker. And as we all know, the listing broker just works for the seller. So at that point in time, buyers would walk in thinking that this agent was there to help them out. And then in reality, they weren't, which caused a reason for concern of, hey, buyers don't have their own representation just as much as the sellers do. And there was this whole propaganda, basically going around saying buyers beware back in the 1960s, 1970s. And it wasn't until the 1990s where the public basically demanded that the buyer have their own representation, which then of essence became a buyer's agent, which is what we know of it today. That said, it was just basically to resolve that gray area of, is the listing agent really looking out for your best interest? When in reality, they're looking out for the best interest of the seller. And although there is dual agencies, meaning an agent can work for both parties, as you can imagine, there's probably going to be some gray areas where people are going to be a little hesitant of, well, did you really work a good deal for me, or did you work out a deal for the other side? So that's why you need a buyer representation, which is what came about in the 1990s, as I mentioned. Now we're taking it back to, well, buyers, you don't have to use a buyer's agent if you don't want to, because now they're leaving it up to the consumer to pay for their own representation. So that being said, I kind of want to get like an idea of what you guys, both of you guys think on the matter.
I'll let Bartholomew go first. Bartholomew, you want to go first?
Yeah, absolutely. I think that because the core, I think, fundamental conflict was about compensation and where that compensation is coming from. So now the obligation is going to be on the buyers who want agency representation, which is an essential part of real estate because it's the real estate agent that will have your best interest, that is representing you on your side, and therefore can negotiate for you, can guide you through the process, can be a set of core and fundamental value because they have the experience, they know what to expect, they know what you should expect, and that way the compensation is justified. Now, a different matter and different question is whether or not buyers can be able to support that added cost, because that is added cost that would come. But when thinking about the value that comes with having an agent, that's where it's going to be critical for buyers to be more informed and also the agents to be aware on how they present themselves, because it does come down to having that difficult conversation earlier on where it's no longer going to be the expectation that the seller is going to provide commission or compensation to the buyer's agent. Can it happen? Sure. Is it very likely? Depends. Everything is going to be circumstantial, and that sort of thing is going to really depend on the listing agent on what they agreed upon based on the listing agreement. So now that's one side. The other side is the representation side and whether or not you want a buyer's agent. One of the adverse effects was, hey, agents that were dominant on the buying side have left the industry and will probably continue to leave the industry because this added stressor on, okay, my compensation is not necessarily guaranteed and I'm not really willing to have that conversation with my clients in the future, so I'm out. That's a possible circumstance that buyers agents can find themselves in. For those that are still remaining as agents, now it's going to be forced on us and something that's part of the stipulation to have written buyer agency agreements where now that has to be set in stone in writing that we have representation for a client, because that way they understand what they're basically signing up for by having a buyer's agent. And at the same time, when it comes to compensation, well, compensation is going to go through the broker. And at the end of the day, we are providing a service, and that service is going to come in the form of compensation at the end. Otherwise, we generally do risk of basically working for free if that sort of agreement is not in place. I think it it will also set a defining distinction on what sort of behavior a consumer will have with agents. I think commonly it's the first agent that buyers come across that is the agent that they will tend to work with more so. And then second is those that are more informed about what happens out of the settlement or what will be the status quo. Now, if they take it upon themselves, they can interview different agents to figure out, okay, which agent can I see myself working with? And then therefore having, okay, this is what my resume looks like, this is what the value I offer, and this is why you should hire me as your representation. I think it's great because those that are serious about their craft in real estate and have a team that they know that they've worked with that is proven in their outcomes, that they will continue to do well in the industry. And so I think overall, I think it's changes that we're bound to happen and inevitable.
Right. I would have to agree. I mean, there's always, there's always pros and cons when there's any changes and any interruptions in the market. I love the history that, you provided, Juan. Thank you, because it definitely gives an audience, just kind of an idea of what the past looked like. And I mean, it can go way further than that because when it comes to NAR, I mean, they have constantly, implemented changes along the way. So this doesn't come, as a surprise. It's all just a matter of, what's going on right now that, some individuals may not be as happy with, you know. So home prices have obviously increased dramatically over the last 5 years. And as a seller, that's gaining or that is losing, sometimes, that can rub some people the wrong way. But I always say, put yourself in in the same shoes, because if you're selling a home, you're still going to go buy a home, right?
Mm-hmm.
Unless you're just never going to buy a house again, you're just going to go rent. So now that puts you, in the same position that you would have put the buyer that was going to buy, that's going to buy your home.
Mm-hmm.
So I always like to look at the pros and cons, because a lot of people, don't look at it like that. Are there going to be, changes across the board? Absolutely. But I feel that, along with, some not some, good changes, can also come some good changes, right? Because there's always pros and cons. Now, the pro is that, if you have a client that is going to be shopping you, I mean, you now get to, put them into a contract, just like a listing agent. A listing agent puts a seller into a contract for anywhere between 3 to 6 months, sometimes even a little bit longer, to secure, the sale of that house. Well, that's always a great thing, because then that, when you're working that home, that listing, you're investing time, money, to be able to get that house sold. Well, with the buyer, it also locks your buyer in, because we already know that buyers have so many different ways, to view homes, online, open houses. And, sometimes, unfortunately, they end up, switching agents along the way without the buyer sometimes really knowing exactly, how things flow, especially if they're a first-time home buyer. I've seen it happen time and time again. They're working with an agent, and before you know it, they're in escrow with another agent, because there was no actual agreement in place. So I think that for that, it's going to be a great thing, because then you don't really have to worry or stress too much about losing that potential client, for any unethical reasons.
Mm-hmm.
Okay. I won't go into details, but, for any unethical reasons.
Yeah.
With that being said, though, educating your buyer and your seller is going to definitely be super crucial. Like Bartholomew was mentioning, the value that you are going to, carry as an agent, both listing agent and selling agent, it's going to definitely weed a lot of people out of the business. And the reason why is because if you, inform your seller the way that I know that you guys do, of the necessities to be able to get the house sold, right?
Mm-hmm.
I mean, the bottom line is, if you are not going to have, if you're not going to pay for some representation to get the house sold, I mean, it's going to be probably a little bit difficult, to get realtors to drive an audience into that house. I
Mm-hmm.
mean, in all reality, that's what it comes down to, and if the buyers, start calling the listing agent directly, I mean, the listing agent is now going to do the work for,
Mm-hmm.
for two transactions with the pay of one,
Mm-hmm.
if there isn't any of that, negotiations in the commission structure, right? If the seller isn't willing to help with, cost for the selling agent, that's gonna trying to buy that house. So it's gonna go in so many different ways. But I think that ultimately education, educating your clients, listing it, the seller and the buyer, is definitely going to be key, because I already hear some agents, talking about how the importance of compensation
Mm-hmm.
for the seller representation, the selling agent.
Mm-hmm.
Um, because again, it all comes down to how fast do you want to get this house sold? And when people put their house on the market, I mean, the goal is to sell it. The goal is not for the house to sit unless they're testing the market. That's a whole different, set of audience. But if you're an individual that, is wanting to sell your house, a lot of times, you just want to know what the bottom line is. And at the end of the day, as long as the transparency is there with, the bottom of the line numbers for the seller, for the buyer, I think that it's easier to come to an agreement. A lot of this NAR settlement has been bringing so much attention to the media. And the unfortunate part with that is that when it is being translated through the media on TV with the news, it is hardly ever the correct information that comes out. I mean, and that is across the board with, so many different areas of the news, mortgages, rates. Is it a great time to buy? No, it's the worst time to buy. I mean, I think the news has been saying that it's the worst time to buy for the last few years.
Mm-hmm.
And now that has placed a lot of buyers in a very difficult situation and position, because now they've bought a year, 2 years later at a much higher price. Again, because of information that was shared through the news. So not to say that it's all bad, but I'm just saying there's a reason why, there is representation for buyers, for sellers, for real estate, for lending. Talk to an expert, seek an expert's advice. That is all we can stress all day long, because if we're talking to our comadres, if we're talking to our tias, tios, that might work in a completely different industry, such as maybe the school district, just different industries that are not in real estate. They're just trying to give you the best advice that they know of.
Yes.
But they're not an expert in the matter. So if there's anything that I can stress on, that is just seek professional expert advice, because that will definitely take you a much, much, much longer way.
Very well said. Just want to go ahead and touch on, you said the news, it gives not the most accurate, or I guess, I don't want to say misleading information, but it's definitely going to give the audience kind of like more of the eye-catching information of like, best time to buy, worst time to buy, interest rates, high, low, all these sorts of different things that are just eye-catching, and you're not really getting the full depth of what's going on in that industry. So yeah, exactly what Juanita said for the audience, like, consult a professional and, talk to a lender, talk to a real estate agent. At the end of the day, that's what's going to really get you in the forefront of, what's really going on behind the scenes with everything. And I'm glad that you brought all this up, you and Bartholomew, with regards to the whole interest rates, because I mean, I don't know how many times have you guys heard out in the news that, at the start of the year, we were expecting like 6 rate cuts. And then it went down to 4, and then now we're sitting at 0. And Juanita, can you tell us, Juanita or Bartholomew, like, I mean, have you heard anything new regarding the interest rates or the rate cuts going on for this year?
Right. So it's important. Absolutely. Absolutely. As a lender, it is important to understand that the interest rates are all based on the economy. Bottom line. I mean, that is what it comes down to. And based on the numbers that come out with the reports, the consumer price index, the rents reports, the cost of goods, everything that comes out on a monthly base, is what causes, the feds to meet to find out, okay, how is the economy moving? Right. Yeah. And as all of these reports continue to come in pretty strong, what does that tell the feds? That the economy is still good, that the economy is strong, that there is no reason to drop or start decreasing interest rates yet. That is the reason why there have not been any rate cuts. Yes, last year, I mean, COVID changed everything, right? I mean, rates dropped at an all-time low because there was a panic in the world. I mean, we were all locked in our homes. Nobody knew what was going to happen. People were dropping like flies. Unfortunately, there was a lot of, people that passed because of COVID. So there was a lot of panic going into the world. And in my opinion, I think the worst time to make a very important decision is when you're in panic mode. But hey, you know what? People do what they do, and what happened. Rates got slashed so that, buyers, sellers wouldn't, freak out, because real estate is a huge movement of the economy. Okay. Huge. They still wanted people to, keep continuing to do what they're going to do. Although what happened with that is it brought people into the market that would have never, ever, ever thought they were going to buy a house, would have never even planned to purchase a house, because it was so, the costs were so affordable. I mean, you buy, a $400,000 house with a 2.5, 2.25, 3% interest rate. I mean, that was a no-brainer, right? And what happened? The market got flooded. The market got flooded. We're all still stuck at home. Builders are not really building homes because, we are limited. Shipping is limited. The world is pretty much kind of like at a stance. And the homes that are available, they're still being sold or flying off the market. And what happens? We have to, things kept going, right? With COVID, they introduced vaccines, and they we're compensating people, with, funds, because they couldn't go to work. And obviously, we still have to eat, even though we're at home, food costs money, necessities. And anyway, so there was a lot of money that was, put into households, to be able to help them survive during this pandemic.
Mhm.
For the people that were stuck at home, that couldn't go to work, that were not working in, healthcare, the essential employees, basically.
Yeah.
And where did that money come from? The state, the government, right? I mean,
Jerome
it
Powell.
has to come from somewhere. And so now we've got this large deficit, of course. But to bring me back to rates, the average rate, has been about 7 to 8%. The last crash that happened, in 2007, 8, 9, uh, was huge and it was massive, but it was for so many different reasons. It was because there was a lot of predatory lending going on.
Right.
And there weren't real licensed guidelines in place, for buyers to be able to really, really fully qualify for that mortgage. It was more like, you want that mortgage, great, you can have it. Provide X, Y, and Z, and you're in the house. Now, of course, most people don't read the bottom line. Most people don't read what they sign. But a lot of those loans were adjustable rate mortgages, where they were just paying for the interest rate on that house. They
Mhm.
weren't bringing down their principal. So then before you knew it, they were backwards on the house. They had balloon payments. Payments started going up, and there was, no way to be able to pay the full mortgage payment.
Yeah.
Well, that is a huge reason for that cost of, the market crash. Although it's important to understand that when that happened, there were millions of houses that went on the inventory, tons of homes.
Yeah.
That is not the case right now. I mean, right now in my area, we're dealing with about less than 400 homes for sale in the Antelope Valley. I mean, but it's not just the Antelope Valley, it's across the world right now, nationwide. There is a huge shortage. Why? Because we were during the pandemic, we were stuck. We weren't moving. So there wasn't construction going on. And what happened with the pandemic and all that money is it cost of goods to increase, right? I mean, lumber is way much more expensive now than it was 2, 3 years ago,
Oh yeah.
right?
Excessively.
So my biggest, um, tip for buyers is, how do you expect a house to drop in price?
Mhm.
Let's say a brand new house, right? When it costs twice as much to build it.
Mhm.
See, that's where the misrepresentation is at. Oh, homes have to come down. The market has to crash because essentially, every 10 to 12 years there's a correction in the market, which typically there is. And I think we were coming across a correction, but then COVID hit and that changed everything. So is there going to be a correction? I mean, I don't know. I mean, there's been a pay in increases now. I mean, I think if you work in food, I think the starting rate is like $20 an hour in California anyway.
Yeah.
The minimum wage. I mean, so
California
if you're
wages.
paying, if you're paying $7, for a Starbucks, it's because it's going towards wages, inflation. So
Yeah.
bringing it back, back to rates, interest rates. Um, are the cuts still coming? Um, they will, but not at the timeline that we were expecting, because the economy still looks strong based on all of the reports that are coming out on a monthly and a quarterly basis with the feds.
Mhm.
So that's the reason why we haven't seen any cuts yet. People ask, when are the rates coming? I mean, I wish I had a crystal ball. Last year we talked about a potential 5 to 6 rate cuts this year, and it still hasn't happened. But why? Because it's all based on the economy. Now, can we see an improvement in rates? Yes, I believe so. But I wouldn't say, don't buy with the expectation of the rate dropping, at the end of the year, and refinancing, to stay in the house. I would say, look at it if you can afford the payment, and if you can, sacrifice that rate for the next, 2 to 3 years, then I would say you're fine, because rates will definitely start to improve. I mean, I believe that it's been said that most of the COVID money has already been spent. So I think this is where the real numbers are going to start to show with inflation and
Mhm.
how people are being affected by, the cost of goods right now. Because I'm not going to lie, I mean, they're expensive. I mean, for myself, I've had to kind of like step back on a few things that were, a little more luxurious
Yeah.
because of how expensive, things are right now. So I can't even imagine, most of the people that, have to be in a place where, they need these items, and it's very difficult to get those items because of the prices.
There's yeah,
Um,
there's definitely a lot of assistance needed. And I mean, I go to a grocery store like just last week. I see, well, this is pasture raised eggs, $10, $12 for pasture raised eggs. I'm like, well, these were like $5 a few years ago. And they were the more expensive ones because you could get the cheaper eggs for maybe $1.50, $2, two
right.
fifty that are cage free. And I don't know why I brought eggs, but that's the first thing that came to my head.
I think it's
Now
because
those-
I think because there was that phenomenon with eggs that went up to like $12 during that
yeah,
time. Remember, first it was toilet paper, and then everybody hoarded it,
it was
and
yeah.
and then it happened with eggs. I mean, but the poor chickens, they can only lay so many eggs.
I know. Oh God, I
Way
think
faster.
that's right. So I mean, the cost of goods they're going up. So I mean, you hit it right, like literally right on the nail with all that. And then as far as like,
What
go ahead,
comment
Bartholomew.
on a general comment? The adverse effect of increased wages and what people generally don't realize is, yeah, you're getting paid more, but at the same time, everything's going to be much more expensive because of it.
Yeah,
That
Exactly.
that's one part. And at the same time, hey, you're getting paid more. Okay, great. This must mean I can spend more. No, it doesn't. Everything goes up along with it. At the same time, if we relate this back to a budget on home purchases, like we run through numbers for this reason. And when it comes to, okay, consideration, you were talking about the growth of the economy and what's happening with inflation. And those are the sort of things that impact your numbers when we look at, okay, what are you going to be pre-approved for today in today's world, in today's market? Because months from now, it's going to be different. Years from now, it's going to be different. I think being important is going to be thinking long term today as opposed to short term, because it's really going to come down to, okay, what is the monthly that you're buying? What is the rate? But at the same time, you can't let the fear of the media just steer you in one direction and not really take into account the bigger picture.
mhm,
Um, this brings to certain situations where you might have an attractive offering for something that is an adjustable rate mortgage, where an introductory, and you can tell us more about these sort of things, Juanita, where introductory rates tend to be very attractive, right? But depending on how the market behaves, things can look a little bit different. And I think we've both seen, and maybe Juan has too, where we've been in situations where we hear back from clients that they might be concerned because, it's been 2, 3 years during COVID up until now. Hey, rates are not coming down. Yeah, they have not, and they can see changes on their mortgages coming soon. Juanita, can you tell us about these ARM
Yes,
offerings?
absolutely. Yes. Although they do look very lucrative, Bartholomew, just like you mentioned, I mean, it all comes down to really, really, really informing the client of the adverse effects, like you said. Now, the beauty about these types of programs now, though, compared to 10 years ago, is that you now have to qualify with the total payment at the maturity rate. So if somebody gets into an adjustable rate mortgage at a 4%, for 3 years, um, and it's going to mature to 7%, when you buy that house, you have to qualify at the 7%, because that tells us, the bank, that you can actually pay the mortgage. Regardless of what the payment does that you are agreeing to, you can pay the mortgage. Now, here is some of the things that we don't plan for, when we do that. A tragic loss, right? You take one household income out of the house, what happens? Immediately, most people are only, a payment away from losing everything that they have.
mhm,
Okay, that I'm talking about the mass majority of individuals. Most people don't have 6 months of reserves in their accounts. So when something like that hits, it's definitely panic mode.
mhm.
Okay, so that's one thing to think about. The second thing to think about, loss of job, layoffs. There's some industries right now that are definitely experiencing this. So although that payment does look really, really good right now, I mean, do you have job security? Does anybody? Anytime you're trading time, hours for time, do you have that security? A lot of times you don't. So that's another thing to think about. So just, kind of short-term and long-term thinking with your lender, with your real estate team is absolutely crucial. If we know that the payment is not an issue and you can qualify for it and you're only probably going to be in the house for maybe 3 to 5 years, absolutely makes all the sense in the world. I go over these with my veterans all the time. Why? Because if they're in this state for 2, maybe 4 years max, why not? You're going to buy the house, live in it, sell it within 5 years. Makes all the sense in the world. Now, if you're looking at it just to try to get into the market and you're hoping that rates are going to get better by the time that, it matures, just be ready for the worst case scenario, because we never know what the economy is going to do. Just like there were supposed to be 6 rate cuts this year, and a lot of the people that got into those adjustables, a few years ago, they're looking at the maturity date like, oh wow, like it's coming, it's coming. But be ready for it, because again, it's a risk. It's a risk. If you're willing to take that risk, the beauty of it is that you can definitely afford it, so you were qualified correctly. If there was no changes, that happened within the last few years in the household, if there wasn't an extra child that came that now is costing more, if you don't have a child that's going to college, that's going to cost more, if both, are still working, then you're fine. But these are all things to think about, because yes, the adjustable rate mortgages, are very lucrative. They can definitely work. There's also buy downs now, which I consider it kind of like another fancy word for adjustable rates, because you basically buy down your rate, your interest rate, similar to an adjustable, right? And it changes, either the first year, the second year, the third year, depending on the buy down term, because they're available for 1, 2, or 3 years. So it will adjust, and then it'll adjust to the maturity, just like the adjustable that you bought it down for. Now, the catch to that is that you're paying for that buy down in the rate. So depending on what the market does, if you pay for a 3-year buy down right now, and let's just say hypothetically the rates do improve in about 1.5 to 2 years, you're going to refinance. So you just threw away money that you paid down for that 3rd year.
Yeah.
I mean, so it's a hit and miss, but if money is not an issue, and I mean, you're willing to risk it, it just depends on the individual. It can work.
Yeah.
Absolutely.
100%. Literally, I had a friend of mine literally just get into an adjustable rate mortgage themselves. I asked them, like, you do understand what that means, right? And then, he went on and said, like, yeah, it's just, for the first year, we only pay, X amount percent, 5%. Next year, 6, exactly how we're going on about. And then once it matures, it goes to what the market rate is at that point in time, right? So he's flat out told me, he said, well, we're just taking a risk and hoping that the rates come down how they're saying, because I already know the moment it matures, I know we're not going to be able to make it. So when I heard that, it just triggered like a bulb in my head. I'm like, dude, are you telling me that you basically just gambled away, on your life savings essentially? Because it was a large lump sum that they put down for the down payment, right? So that he knows that at the end of the day, if they're probably not gonna be able to afford it if that does mature. So, but that was a risk that he and his partner were willing to make. So at the end of the day, it's like, it really comes down to an individual decision. Like, you as a person, you as an individual, and exactly how, Juanita and Bartholomew were saying, if money is not an issue and you are able to take on those risks, it's not something to just veer off and disregard as an option. Because it is an option, but you have to make sure you understand the fine print first and foremost, and you got to make sure that whoever you are working with, anybody out there is, you are being, explained, and you're being kind of guided through all this and what all these different terminologies mean and what contractual language is really held within those arms, or even those rate buy downs. Something that I wanted to bring up that Juanita mentioned earlier was balloon payments, because I feel like that's something I just want to kind of put it out there for the world to know, is just like, what are balloon payments? Because when I was first getting into the real estate industry, I'm like, oh, this is what this term is called. At the end of the day, it's something as like, you're coming in, you're like, say you buy a house, you're paying down your interest only for the life of the loan. Come at the end of the life of the loan, you're gonna have to pay that lump sum principal that you took out at the beginning. So you better have hope that you budgeted away enough money to pay back that principal. because it seems all fine and dandy if you're just paying interest and all your monthly payments are like, wow, it's such a low cost, it's such a low cost. And then at the very end of it, you have this balloon payment of 300, 400, $500,000 that you owe, and you're like, oh, and you've just been spending sporadically because you thought that you had like such a minimum like monthly expenses because of the type of loan that you took out, and then it just kind of hits you across the face like, oh, I didn't budget for this. And that happens, and that's essentially part of, part of what Juanita was saying early in the video was that's what happened during the crash in 2008, 2009. People were getting approved for all these different mortgages and all these different loans without really understanding the terms. And when it came down to actually paying off their loan, they couldn't. Henceforth, the crash. And now what Juanita just mentioned is about like now you're having to get pre-approved with the actual market rate, meaning if you can't get approved for 7%, they're not going to give you a loan for 4%, which is, in essence, I think that's a really good idea. It's a fantastic idea because like now you're going into the market with, with the expectation of getting a loan at a 7% interest rate. You could pay that off, you qualify for it. You just being able to pay a little bit less at 4%, 5%, whatever that rate buy down or that arm was looking like. Fantastic, because then when it matures, you're able to continue paying your mortgage. But you're knowingly getting into a contract that your payments are going to increase on an annual basis until it matures. And then depending on what the market conditions, you can refinance if that's a good option for you. What's it called? So, but no, this is all good information that I feel like I wish I would, I'm still young. But it's something that, I always let, my friends, my family, anybody who really just comes to me and asks for like, hey, what should I look out for in the real estate market? What's good? What should I ask my real estate agents, my lenders, etc. It's just something that I feel like everybody should know about and should be really aware of. But when we're throwing out just like our terminology as realtors, as lenders, balloon payments, arms, to just the regular consumer, like if I didn't have my real estate license, I wouldn't know what that meant. I would need somebody to explain that to me,
I think something similar to what we saw with the no income, no credit is the buy now, pay later model, which is very, very popular these days. And like you might have been pre-approved at a 20% debt to income ratio, and then accumulated debt of something that was a buy now, pay later. Then all of a sudden you have a substantial amount of debt that introductory 0%. But at the back end, okay, you eventually have to pay this off, and those rates are ridiculously high. And when you have consumers that like the habit is to just spend, and now okay, you're really running the risk of you're going to default on your loan because of it if you can't make the payments. I think something very interesting, like if you take two profiles, someone at a 20% DTI, someone at a 33% DTI, one's maxed out, the other one, they have wiggle room. But fast forward a couple years, you introduce something like this buy now, pay later model is okay. That person that was maxed out at the very start, major risk of just not being able to make ends meet. And you add other factors like, hey, car payments. You take out example, a Cybertruck. Okay, now you easily $1,000 car payment there. Not to mention the insurance and just how much more insurance in general in majority of industries are for everything. So these added costs that we don't anticipate and we are expected to budget for, and at the same time, wages, although they might be going up, they don't they don't really keep up with just how much things increase because of inflation. So just an interesting aspect of what the offerings for the consumer in other areas that affect things in real estate.
Mm-hmm.
Yes, and actually to add to that, Bartholomew, last month, the numbers came back on Affirm, right? Buy now, pay later. They're actually 40% in delinquent consumers.
Oh my God.
Yeah, report came in that consumers were 40%, 40% of the consumers were delinquent on that buy now, pay later. So just to show, if you are already somebody that loves to live on the edge, max out everything. I mean, unfortunately, I see documentation all day long. I mean, it just comes through my desk every single day. And, it's hard to teach somebody new ways that isn't really willing to change. Because I'll tell you what, I've seen individuals go through one bankruptcy, second bankruptcy, third bankruptcy, and it's like, at what point is it enough? I mean, it's like everything else, it becomes an addiction. Food is an addiction, drugs are an addiction, alcohol, cigarettes, spending. I mean, it's right there. It all just comes down to mindset, and are you willing, what are you willing to risk, what are you willing to sacrifice to become a homeowner? So the question becomes, is it a good time to buy? Well, that all depends on the individual, because if you're talking to a baby boomer, right, that is pretty much already retired or getting ready to retire, and they have this 4-bedroom house, kids are all gone, it's just the wife and the husband, and yes, they can cash out on all this equity to buy a 2-bedroom, 1-bedroom, whatever the case may be. Is it a good, solid decision with the current market? I mean, if it's going to cost more to be in a smaller house, that make monetary sense, right? For that specific individual. So that is not an issue. That's just a condition to the market. Mm-hmm. But now if we have a family that, is growing, they got married last year, they've been saving, they want to buy a house, the market is doing what it does. Is it a good time for them to buy? Absolutely. I mean, are you going to be in that house for more than 5 years? Are you planning to be in the house for, 5 to 10 years? Yeah, absolutely. It's a good time to buy. Why? Because at this point, you're just basically paying somebody else's mortgage. Why not pay your own mortgage and start to build, equity slowly, so that, 5, 6 years down the road, maybe you can move into the house of your dreams that you were looking for. So that's, for sometimes, first-time home buyers, or somebody has to relocate. I mean, it's just, again, it all depends on the individual. So my answer is yes and no. Yes. Depending on what your scenario is, yes and no. That is basically my opinion. What about you, Bartholomew? What do you think?
This is why I enjoy working with you very much, because we will look at every individual and the circumstances that they're in, and also what is available to them with what they have to work with, because this is the snapshot that we use to work with them in real time. And so with what they're making, with the debts that they have, and what which stage in life they are, that's really going to determine what they're looking for. The added flexibility to those that can be a little bit more flexible, whether it's out of state, whether it's maybe a more short-term type thinking because they know they're going to eventually move, then those are different offerings and suggestions that we will be able to advise on, because those are very circumstantial. It really depends on the individual. That's one. Generally speaking, because inventories are still at a low point, I mean, you're going to see things that are well marketed, well priced, go off the market immediately because they're competing against other active listings. And because of that, those that are very well strategized to be able to sell, then those will go, those will not stay. As an example, in Florida, I've been seeing more and more listings that are getting price reductions that are longer days on market. What does that mean? Well, maybe there's just a general disinterest in those particular properties, the price point, and I see a lot of price reductions happening in certain areas. And because of that, okay, that begs the question, this is the Florida market. If we look at something like California, it's very much different. Price points are different. The profiles of those that are looking at buying is different. The amenities that they're getting is very different. The statutory rules are very different, and because of that, like, everything is going to be impacted at a collective picture, and that's going to be both on the buying side and on the selling side. And at the end of the day, being well informed on what is available to you, the options you have, and that maybe things you haven't considered is an overall best service to yourself, because at the end of the day, it's information that can make a difference in any situation. Being informed, and if not today, who's not to say that you can make a plan to buy tomorrow or the year after? Preparation is critical in these sort of things. If ownership is a goal, if building a portfolio is a goal, if you're thinking long term for maybe having heirs, this is where strategizing comes in handy.
Absolutely. Those who plan to fail, fail to plan. Absolutely. 1,000%.
100%.
So true. And you know what, to add to that, very important. I mean, because you're seeing price reductions right now where you are in Florida. Juan and I just helped a newlywed couple, purchase a home in the San Bernardino County that we're trying to buy in the Orange County. And incredible, right? We started in January, and their offers kept getting rejected, left and right, because people were bidding 40, 50, 100,000 above listing price in Orange County, folks.
Mhm.
These are first time home buyers. I mean, that is incredible, so they had to switch the market a little bit, they went over to San Bernardino for a little bit. So understanding your market and who you work with absolutely matters 110%, because this is how we can help to inform the client, guide the client. But I think that as an individual, I mean, and Juan can help me attest to this, you can only take so much rejection for so long when you want to own a home. When you want to own a home, when you want to be married, whatever the case may be, you're going to do whatever it takes to get your house. So they decided, okay, fine, let's scoot over a little bit, let's go to San Bernardino, see what's available there. Within like a matter of, I think within like a few offers, we were in contract. I mean, so again, who you work with matters. I mean, it definitely makes all the difference in the world, to make sure that you're being taken care of as a client correctly.
Yes, 100%. And just kind of elaborate within just with those clients themselves, like through the numerous amounts of offers that were submitted here in Orange County, like they themselves are putting above asking price. Whether it be 20, 30, 40 above asking, people were still topping that off with 50, 60, 100 over asking in Orange County. And then, something else to understand, especially during the home process and while you're searching for a new home, is that not only is it the people going over asking that are going to make it a little bit more challenging or more competitive, but it's also like looking at, what are the conditions of the individual home on its own. And I bring that up because there was a home where, we could have gotten accepted maybe 5, 6 offers prior to the ones that we had submitted on. The only thing about that specific home was it was a probate sale. And that probate sale needed confirmation by the courts, which could take anywhere between 2 to 12, 18 months, with the possibility of, a going to court, being open to the public, and then somebody in and just scooping it right under your feet, and you just waited all that time for what? So my clients made the decision of like, hey, we don't want it. We don't want to wait that long. So we had to continue moving with our search. And, and ultimately, I think that was a better decision for them, because the last thing you want to be doing and the last thing you'd want an agent doing to you is like, pushing you and just telling you, just buy this one, buy this one, buy this one, without even explaining to you what are the pros and cons, what are the possibilities or the outcomes that are going to come about if you do accept an offer or a counter offer from the seller. So, that made the search a little bit more extensive on top of just the competitive of the market. But ultimately, we were able to go and find a home that they both liked, and we got it for the price that they wanted, that they were comfortable with, and like, okay, this is good. And then when we got the response back, the agents, the selling side, they wanted to ask for more, but we just told them no. Flat out. I was like, hey, like, it's at the end of the day, it's a negotiation, right? So they're always going to be the listing agent is going to be seeking for more for their client. As a buying agent, you need to be looking out for the best interest of your buyers, and your buyers tell you what is their make or don't deal, and that's it. Told them no. Listing agent, sellers said, okay, we agree to the terms, and that was set. And then escrow opened, and now we're closed.
And great job, Juan. Because I think this broke the record for the amount of rejected offers you had with just one specific client, right? How many rejections did you have on this one?
12.
12 rejections in a matter of January, February, March, April, 3 months.
Yeah.
I mean, I know. So think about this, right? So back to the whole NAR issue, right? It's important to understand that your selling agent, somebody that's buying a house, you have a selling agent that's helping you secure the house, buy the house. Think about this. The seller now wants them to basically sell their house for them for free, right? They don't want to pay for it. But yet, you as an agent, you're out there helping them, taking them. You were working with these clients for 3, 4 months,
Mhm.
5 months to close.
Yeah.
And how is that an issue, right? With compensation.
Yeah.
I mean, you spent, I mean, timeless amounts of hours, speaking with these individuals, educating them, showing them property,
Mhm.
different counties. This is where the consumer, I think, can sometimes, get misled and, mix things up. And I'll tell you what, there's clients that I have realtors that have worked with clients for about a year trying to help them find a house. Then they'll take a pause because they get a little overwhelmed. Then they'll
Mhm.
go back into the market. I mean, could you imagine that realtor not receiving any compensation for all of that work that's been done up front? This is where I a lot of the selling agents are struggling because unfortunately, some of the Netflix sunset shows,
Yeah.
selling Sunset, selling Beverly Hills, they make it look so easy, right? Drive up in a Lamborghini, show the house, you're in contract, you get paid. They don't talk about, all of the stuff that happens between the scenes, all of
Yeah.
the rejections, all of the time spent, all of the being the therapist to the client, because I mean, think about this, guys. It can be very devastating, like what's wrong with us? Like, why are we not getting an offer accepted? We've got 700 FICO, we've got $100,000. I mean, we are not maxed out on ratios. It's again, it takes an expert and an individual to be able to help, some clients more than others. I'm not going to say
Yeah.
everybody, but there is a large portion of clients, that need a little extra help. So just kind of wanted to add to that. Sorry. I think I went
Oh.
off on a whole different tangent.
No, no, it's definitely important to touch on, because I mean, at the end of the day, the way that I see it, and this is just my perspective, and Bartholomew, I mean, you could touch on this after too, on like your own personal take on, what our responsibilities are as an agent. And for me, a lot of the times what I've came to find, it's, just being there and protecting your client, whether it's a seller, whether it's a buyer, um, just for the sake, of sticking with on the buying side, because that was the latest transaction that I did was on the buying side was, you want to make sure that your client understands the contract. How I was mentioning earlier, making sure that they know that their decision that they're wanting to make is going to be a good one for them. Because I could get, at the end of the day, and this isn't specific to any of my clients, but I know like a lot of times us as people, as individuals, sometimes we want to make rash decisions of like, or hasty decision of like, oh, okay, I don't care, just put in 100 grand down. And then that might be your full like life savings and you have nothing left. Where, okay, that's where your agent steps in and you need to kind of like, let that person know, let that client know, like, hey, is this something you really want to do? Because if you do this, you also need to think about, the maintenance that may be required on the house you're buying, the repairs that might be needed, any unforeseens that may come up, which, at the end of the day, that's the goal is to not have the least amount, if not zero unforeseen things going into a contract, but things come up where you get into contract, title comes back, and then there's a lien on it from somebody else, and the owner had no idea. That's an unforeseen where, it could be the seller's trying to sell the home. They had a lien on the home. They didn't know about it. Now this other person wants to get compensated for that sale of that home. And now there's this just can of worms that's starting to develop that neither the buyer, the buyer's agent, nor the listing agent had any idea until they actually received title, which there is ways to avoid that in the forefront if the listing agent works accordingly with their client. If they do not, and they do not get a title or, anything that could basically protect their own client from these sorts of things from happening, then that's when you're kind of put in a tougher spot, not just as a buyer, but also as a seller, because it's both the buyer and the seller dealing with it. And at the end of the day, the listing agent and the buying agent are just there to protect you and ensure, guide you in the right direction, because that's all we are, is we're just advisors to you. You could take our advice or you cannot. It's really up to you, but it's just so we could provide an extra layer of protection and provide you with some insight that you probably didn't think about otherwise had you not talked with us. And that's kind of what I see myself as an agent, just being there as like a guideline for buyers and for sellers. I don't know, Bartholomew, what's kind of your take on being an agent.
Yeah, I think it's all of that you said. To add to it, I mean, we're generally supposed to and bound to treat everybody fairly and honest. That's like core fundamental values of what the realtor, real estate agent, real estate professional really is supposed to do. When you have agreement to represent that client, then now you take it a step further. You have this thing about obedience. As long as it's legal and lawful, you are supposed to carry out their wishes. This is where you advise on certain things on, okay, have you considered X versus Y? The other side is being that their best interests at heart, because now you have fiduciary duties that you're supposed to carry out. It's really what is the most fundamental and most important to them. Disclosure, anything that you find out material that might be adverse or otherwise just important for them to make a decision, you have to be able to disclose that to them in a timely fashion. And this goes on both ends. So example, like there's an unexpected repair that happened during an escrow that's supposed to be disclosed on both sides as soon as possible, because that ultimately does impact the transaction, the escrow, and who knows, something else might come out of that because of this new repair that has to happen. And there's a lot of duties that go unspoken. I think you touched over a lot of them earlier about showings, preparing for showings, doing comps to make sure that what the listing price is, that it's gonna be likely to where it's supposed to be when come the appraisal time, right? And that also gives you an idea of what should you be offering based on that listing price. At the end, like everything in the process is a consultation in itself. We assess what goes into it, the risks that might be associated to them, and then present to you the options that are available to you to consider in making a decision. Because when it comes down to it, again, information is really worthwhile when making these sort of big financial decisions, and it's probably the biggest decision that most of us will make in our lifetimes. And because of that, you want to have more information than you probably need. And will sound repetitive, but it's important for you to get this through, because it's the sort of things that will make a huge impact. I know when I was first looking for my first purchase, what was most important to me was, okay, what are my options? Don't just give me what you think I want to hear. It's what is it that I should know about what's going on in this transaction? I wasn't necessarily given that perspective before I became licensed. And because of that, I know I could have had different outcomes, but that's a big incentive for why I became licensed, because I wanted to inform others. If there was an alternative route to any other career path I would have taken, it would have been in the teaching and professor type of role, where I enjoy that very much. I like being a mentor. I like advising. I like figuring out and solving problems. And in the real estate side, I think for most of us, it's a core fundamental goal that we have, whether it's ownership, whether it's building wealth, whether it's just owning a piece of what is the American dream. So that's really where it comes from. And I think, again, the core thing that we're pressing is representation is important, because there's added benefits to it that don't seem obvious, but it's up to us to educate you on why you need representation.